Looks like a good year for my next guest. He's the CEO of Randgold Resources, Mark Bristow. Thanks for joining me at the BMO Metals and Mining Conference.
It's a pleasure. Thank you.
So let's go over some of these numbers for Randgold. You finished 2014 strong with under $700 ounce cash cost, 26% increase in gold production, and a 2% drop in cash costs. So, good year?
Yeah, it was a good year. I think, last quarter of the year was a bit soft. And that, it was planned, but we had a few challenges, and mining's always about managing those challenges. But to get to midpoint on our guidance in ounces was good, and keeping those costs down were incredible. But I think if you put the whole package together, we ended up we drew on our revolver at the end of 2013. We repaid it. We ended up with a solid balance sheet, strong cash on hand, no debt. We rolled over our revolving credit facility and doubled it from 200 to 400 million, and we upped our dividend, and we replaced all the ounces that we mined in 2014 by the end of 2014 at the same gold price, $1,000 long-term gold price.
But how can you maintain such low costs? I think a while back you were, or some thought you were crazy because you had calculated $1,000 an ounce.
Yeah.
So how did you foresee that, or how did you do that?
I think we've always looked at our business on a cost model basis, and so if you manage it on a cost model rather than on a revenue model, and you get seduced by the rising revenue in a cyclical market, and so we have always exercised that discipline. And when the gold price ran away, sort of exponentially, we said, look, that doesn't fit with the input costs that we're seeing. Let's stick with 1,000 and take the margin. And I think that's the key that separated us, because we were able to pay off our capital. We made huge profits during those periods. We were able to pay for the final capital of Kibali, and we didn't issue any stock. And so when you look at the business, it all worked perfectly. But we've always been long-term.
And the Forex situation is also interesting for the miners right now. We're seeing a sort of currency war in place. How has the devalued euro played out for you?
Yeah, it helps. Everything helps. The lower oil price, the 40% of our costs in West Africa are euro costs effectively, because of the linkage between the local currency and the French franc. So that helped. And but at the same time, those are opportunities that we will exploit, but we don't plan on them. We still plan $1.30 euro. We plan $100 oil price. We plan $1,000 gold price. So that because mining is about you set your model when you spend your capital. So if you spend capital to support a model at $1,500 gold and it goes to 12, you're not in good shape. If you spend capital at 1,000 and the gold price is above that, you're always in good shape. So I think that's what we try and do, is to manage for the long term, to be able to manage the cycles. Just like when gold went down to 260, we were still allocating capital at 350 because it was an unsustainable situation at 360 and back in the late 90s.
And we're here at the BMO conference. A lot of deals happen here. Are you in acquisition mode?
Yeah, it's a long story. I think I could not one I can say yes or no. I can say our first real focus in this business, as it always been, is to be sustainable with what we've got. So, as you know from last year, we're talking about a 10-year plan, $1,000 gold, and we've got that. And that's our focus. Then it's about how do we replace the ounces we mine, because we've really got into that plus 1 million ounce producing bracket, and you chew up your reserves quite quickly. So those are the two principal focuses in running the business. Then, of course, it's the best way to move the needle in Randgold on the value side is to find another 10 million ounce project. So you've seen us really shake up the exploration. And then, of course, never have I seen an opportunity like I feel is appearing in the market for M&A before in 30 years.
Wow.
It's stressed.
Right now.
The market is stressed.
Okay.
I think it's not there yet, but it's getting more stressed by the day. everyone's wishing that the gold price will go up so that they don't have to do anything. And ultimately, for the industry to survive, I really believe it needs to reinvent itself. And so with that will come opportunities. And it's interesting, if you look back to the late 90s, early 2000s, in that last crisis the industry had, that really Goldcorp grew out of that, which is now the biggest company by market cap in the industry. And if you go back to those days, it was a lot of criticism about how Goldcorp was formed. We grew out of that early stress of the sub $300.
So should exploration be the primary focus of the mining industry?
Yes, because the reason that it's in the trouble it's in is because it hasn't replaced what it's mined, and it's used the higher gold price to lift the gold price, to increase its reserves, and thereby force the quality of the reserves further and further down. And now it's stuck because the gold price has come back.
It's interesting because often I hear the opposite of that exploration is useless, and even if we stopped exploring for 10 years, it wouldn't affect the gold price.
The gold exploration, it's like pharmaceutical companies. Right. We're a consumptive industry. We mine our asset. If you don't replace it, you run out of business. What's aggravated it is that the gold price went up and allowed the industry to replace it with inferior quality reserves. And now with the costs and the revenue lines sort of closing, it's stuck again.
Now, so overall, would you say you're more optimistic, I guess this stress aside, than last year for the mining industry?
It's such a interesting time, but the gold mining industry always takes longer to work out that it has to do something, because everyone lives in hope and in hopes that some magical force will solve its problems. And we've seen this many times in the cycles. But I think there's less margin for error suddenly, so people are, at least even to this BMO conference, people are starting to wake up to the real issues, and at least they're talking about it. That's the first step, because if you don't want to admit what's wrong, you'll never fix it. No. And I think I'm very hopeful that maybe is the sign that we're going to, because all we need to do is reduce the unprofitable gold we mine, and the gold price will go up. Just like if you go back to early 2000s, when the industry stopped hedging, gold price went up.
So what's stopping them from doing that?
The debt. They've got to service the debt, so they've got to produce the gold, at whatever cost. So that's the catch-22. Right. I think that the industry's in, and that's why it's so good to be debt-free.
Well, on that note, Mark, I wish you continued success. Wise words. Thank you so much for dropping by. Thank you.
That's a pleasure. Thank you.
And thanks for watching our continued coverage from the BMO conference. We'll have more for you. Thanks for watching.